Inflation is at 6.2%, period. That's where we're at. So we have the highest inflation number in 30 years. That is an incredible, staggering fact. Today's video is all about whether we are in a bubble or not. Recently, I did some content talking about the state of the real estate market as I see it in real time in South Florida, and some of that content generated some negative comments, and I was accused of being irresponsible and not prudent towards my audience. So I want to address the bigger market overall because there's a big difference between the local South Florida real estate market as I see it in real time and the much bigger, much more complex picture that exists out there that relates to everything else. And so I want to ensure that I'm clear as to what it is that I'm referencing and hopefully do away with any misconceptions, right? So first of all, my name is Chris Igoe, living in South Florida. I am a full-time, full-service realtor with an all-star team that services all of South Florida. And if you do find this content valuable, then please like, subscribe, comment. The more that you engage with the content, the more that this content will be distributed by YouTube in front of people just like you that are looking to move and live and see what living in South Florida is really like. So if you do that, I fully appreciate that. Also, if you'd like to meet me, then please click the link actually here up there. It's up somewhere. I don't know where it's going to be. And you can schedule a meeting with me. We'll get you on the calendar right away, and we look forward to meeting with you soon. But I really want to address the big elephant in the room, which is the market dynamics overall. The market dynamics overall, as I see them now, mind you, I am not a financial advisor. I am not an economist. I'm none of those things. I was a stockbroker, a Series 7 stockbroker for 18 years in Boca Raton. So I do have some experience in terms of market cycles and economic cycles. And, you know, being a little bit older, being 46 years old, I certainly lived through various recessions, booms, busts, and all different cycles of the economy. And if you, anybody who lives long enough will probably experience those too. So I want to talk about that a little bit because I do believe there is still a lot of misinformation out there, but the truth is, I don't know if we're in a bubble or not as it relates to real estate here locally. And the only time I'll know that is after it's popped. And that's the truth about anybody. You don't know. You can try to read the tea leaves and you can try to govern yourself accordingly in real time, which is what I do. But as of right now, I don't see anything that points to any of that. But I see lots of warning signs that exist as it relates to the overall dynamics of other markets and the economy at large, right? So I'm going to go back a little bit and I'm going to do a screen share here momentarily so I can illustrate this with some charts and graphs and stuff like that. Also, I do want to shout out some people. Let me speak to a manager, Frank Cava, Ian Matthews, as well as Patrick Bet David and Valuetainment, and also Reventure Consulting, right? So there's a lot of people out there that are talking about a lot of the same things and trying to provide context in real time. So that's what I'm looking to do right now too, right? I want to educate and inform to help empower you to make the best decisions for yourself, for your family, and for your financial bottom line. But that being said, inflation is at 6.2%. That is a big, staggering number. That is something to be mindful of. And one of the things that I'm painfully aware of, and I expect that you probably are feeling this too, is the cost of goods has increased radically, exponentially over the near term, right? So to put that into context, I think and my stats may be a little bit off, but I hope it will illustrate the point. But, you know, milk is more expensive. Bacon is up 18% year over year. Gas is up significantly year over year. Interest rates are still incredibly low, but we're seeing warning signs, right? So the Fed has indicated that they're going to stop buying or slow down in buying their treasuries. These are the same people who have pumped tremendous liquidity into the market and purchased anything that they could get their hands onto. And the money supply has gone through the roof. I will share some screens now so I can better illustrate that. Okay, so let's go here to, no, that is courtesy of Valuetainment. That is not my content, but here we go. This chart represents the money supply going back all the way to 1975. And what you'll see here is there's a pretty flat line up until right about here, right? And what date is that? What year is that? Oh, that's 2008, right? So when the market got decimated and crashed and announced all of the stimulus that they were going to do to prop up the economy, that's when the spending took off. That's when the money supply started taking off. That's when the printing of money started to take off. And it has not relented at all. In fact, it has increased exponentially, as you can see by this line here. But if you'll follow me here, so someone had asked me, had left a comment in the YouTube channel on one of my rebuttals, where I talk about the state of the market now, and you can check out a link up there because I'll have a link to that video. But I was where was I going with this? I lost my train of thought. They asked, what was I saying in 2000? And my phone is ringing. This is why you turn off your phone when you shoot content. But they asked, what was I saying in 2008? And I was saying the exact same thing that I'm saying right now. I knew instantly, in real time, that if you bring interest rates down to zero, if lending money is essentially free, which again, it was never that low, but it was damn close, and you pump trillions of dollars into the economy, that at some point there is going to be hell to pay. For every action, there's an equal and opposite reaction. So I knew for certain instantly, and again, that doesn't make me particularly smart. Anybody with any measure of common sense could have predicted that. But I knew at some point that there was going to be a reckoning. And it feels as though we are now we have to pay that bill. That reckoning is here. What does that look like? Well, we're going to go over that. We're going to discuss it. So are we in a bubble right now? As far as real estate's concerned, I don't know, and neither does anybody else. Typically, when we start to feel like things are frothy in a bubble, it's usually, and again, historical context, it's usually the beginning of the bubble, right? So I don't know how long this is going to continue, but I do know from a fundamental standpoint, from what I see in real time, as it relates to the real estate market here in South Florida, there is an undersupply of homes, and there is tremendous demand from around the rest of the country. And as long as that is the case, then values will continue to appreciate, period, end of story. It's the easiest economic concept. Supply and demand is the easiest thing to explain. Now, I will get back to that, because another question that was asked is, how does interest rates, or if interest rates rise, what impact does that have on the price of real estate or the value of real estate? And typically they have an inverse relationship. So I want to talk about that here as we progress, but I want to cover a lot of different topics here. So if you look at just simply when they started printing money to bail out and save the economy, what they did was delay the soft landing that we should have had. And soft landing being relative, because this was the too big to fail time. And also bear in mind that analysts are wrong constantly. So the fact that there are analysts right now that are calling for, bullish expectations, or that anything is going to continue to go higher, got to bear in mind that these were also the same analysts that said that these banks were too big to fail, that would never happen. And then, the next day Lehman Brothers was completely out of business. So analysts are wrong all the time, period. And I'm not an analyst. I don't pretend to be one. What I do see, I relate to you in real time, and I don't see anything changing as it relates to values of real estate in South Florida. anytime soon. But I'll go deeper on that in a little bit here. So again, we're just looking at the money supply, right? It is, they start printing money, they're printing money, it continues to trend higher. Well, that is not a good thing from an economic standpoint, period. Just not. You can't have you can only artificiate growth or artificially stimulate growth for so long, and you can only prop something up so long before there's an equal and opposite reaction. But here's the thing that really is scary. To just put it into context, look at this spending or printing of money that happened once COVID hit. And this is bigger than anything we've ever seen in the history of our country, period. And let's see how far back this goes. Does it go back any further? No. Well, I can tell you it doesn't go back any further, but all you have to do is very quickly visually look at this insane line to realize that in this 1 year, we have probably printed more money than any other time in the history of the world combined. And we continue to. And with that, now we have even with that, we still have interest rates. Because of that, we have interest rates at a very low percentage, period. It is a very easy time to refinance. It's a very easy time I don't want to say it's an easy time to get a loan, because that's not true. It is not easy to get a loan. In fact, it is more challenging to qualify for a loan now than really at any other point in history. So that's a good thing, I might add. But you cannot neglect, or you cannot fail to appreciate this massive amount of spending and what impact that's going to have on the economy at some point. It's going to come home to roost, and it's not a good thing, right? So with that in mind, where are we at now? Are we in a bubble, and what does that mean to you? Well, inflation is real, right? And let me go over here to just kind of talk about, and this is straight from Valuetainment. This is a PDF that Patrick Bet-David explained in a video, which I'll also link here so you can check out. He was going to do a much better job of explaining it than I did, or that I do, but you get the concepts. So people are talking about bubble, and I think it's more important to understand the economic cycle that we're in, because I don't know that everybody understands that, right? And there are very well-defined stages of economic growth, boom and bust. And they can be over an indeterminate amount of time. In this chart, it says, or in this PDF, it talks about 5 to 10 years. That could be true. It could be a different timeline, right? But expansion is when things are growing. It's the spring. The peak, which one could argue is right now, is the hottest day of summer. And then there's the contraction, which would be considered fall. And then down here is when things start to get rough. And that would be the winter. So are we entering the winter of the economic cycle? Yes. Are we entering the winter of the real estate market in South Florida? I don't see that yet. I don't see anything that points to that yet. I would argue that we're not even at the peak yet. I would say that we are still in this expansion mode. But again, I could be wrong. Time will tell, and the only time we'll know is after it happened, because all of these measures that we track, that we see in real time, are all lagging stats, right? Now, I'm not going to go into the reason for inflation, but this PDF is something that you can check out. And if you click the link to his video, he goes into a very thorough, detailed analysis of what all these things are. And it's very, very important to understand. But what I know is this: if you're paying right now for gasoline, you go to the pump, you're driving your car, you're going to work, you're doing your life, you're living your life. And you want to pay for gas, and gas is whatever it is right now, but it's up something like 50% year over year. What does it look like when gas, and I should probably cover some of this stuff too. I'm not going to do that now. I don't want to rip off his material any more than I already have. but be mindful of where we're at in the economic cycle. It's important. But let's get back to gas. So what happens when gas is $5 a gallon? What happens when it's $6 a gallon? What happens when it's $10 a gallon? What happens when it's like in Europe where it's $10 to $15 a gallon? What impact does that have on your ability to live your life the way you're used to doing? Well, it's obvious it's going to have a negative impact on your life. And that is absolutely going to change the trajectory of everything that exists in your life right now and in the country right now. Absolutely has to happen. So am I calling for a $10 prediction on gas? No. Do I think that that's a possibility? 100%. So I'm not trying to scare anybody, but I am talking reality here. So what do we have? We've got a market and we've got a money supply that has gone through the roof. We have a stock market that's at all-time highs. We've got people and corporations that have gotten all kinds of artificial stimulus via PPE and whatever other stimulus package that exists out there. We got plenty of people that are out there making a fortune very easily because interest rates are so low and money is so cheap, and people are suffering from, in some cases, irrational exuberance. But I don't think it's irrational exuberance. That's an Alan Greenspan term from back in 2007 and maybe a little bit before then. But I don't think that's what we're seeing here. I think right now we're seeing people who are just sitting with a lot of easy money and they're not being prudent or responsible with it. So if you're a company out there that got all this PPE money and you're buying back your stock or you're doing whatever you're doing, good for you. That's great. Make hay while the sun is shining. If you're an investor, my conversation with you is very different than it is if you're someone that is looking to buy a home and have shelter for themselves and family for the long term. So you must be aware of what your timeline is when you're making any investment. You've got to be prudent. You've got to be smart. You've got to be patient when making an investment. And you've got to be prepared to have an extended timeline if you're wrong. You better be capitalized well enough to be able to weather the storm of whatever economic cycle that we're in, because that's the nature of investing. So if you're out there looking for the quick, easy trade, good luck. I'm not a market timer. Anytime I ever try to time the market, I'm always wrong. And so is basically everybody else. That's just the truth of the matter. But if you're investing, if you are finding undervalued assets that are providing cash flow or whatever that is, if you're finding something fundamentally underpriced to the market, well, then congratulations, load the boat. But that's not what we're talking about here as it relates to living in South Florida for the most part of the people that I speak to. These are people who want to be out of wherever they're at and into the freedom and lifestyle that is afforded by moving to South Florida. So if you are out there looking to buy a home in South Florida and you're concerned about what the market looks like, I understand that. But I would also want to let everybody know, what are you prepared to do when interest rates rise? And that's going to happen. And I can't tell you when, I have no idea. But what I do know is interest rates to go out there and get financing on a home right now is very, very, very inexpensive and is very, very favorable to anybody who's looking to do it today. And I think that's going to continue over the course of the next year. But I could be wrong. What if interest rates are 10% next year? Well, chances are that the market is obviously going to go down, and a lot less people who are able to buy homes today will be able to buy them tomorrow or next year, if that was the case, right? Now, I'm not calling for that, but I'm just talking about what could happen. Back in the day, I think this is going back to Jimmy Carter, interest rates were 17% or 18%, something in that ballpark. Well, when interest rates are 17%, you can afford to buy a lot less home than you're able to do right now. And that's, common sense. I think that shouldn't be a hard concept to understand. But as interest rates rise, you can afford less home, and that's the way it goes. At some point, the tipping point will be that the market will correct and it will pull back. Over time, it will also come back and appreciate. So you need to understand. It's always important for me to understand. It's also important for you to understand what your timeline here is and why you're buying the property in the first place. If it's an investment, that's a different timeline. If you're looking to flip it, it's a very different timeline. If you're looking for the easy deals that exist right now from an investment standpoint, good luck. They don't exist. They don't exist anywhere. Right now, Tesla is, I think the PE on Tesla, and I'm not, which is a price earnings ratio, which gives you a ratio as to whether the stock is overvalued or undervalued, and it's based on forward earnings or estimates or whatever that is. Well, the truth is they're trading at a PE of over 1,000. That's insane. It's just insane. And if you look at some of the historical perspectives on PEs, you'll realize that the market overall is incredibly frothy. So is the stock market going to correct? Is there going to be a correction in, across the board in many different places? Absolutely. I don't know when, and neither does anybody else. So you've got to be prudent, you've got to be disciplined, and you've got to understand why you're buying, and I'm bringing it back, buying anything and what your timeline is. But if you're out there looking to buy a home in South Florida, well, there are other advantages that you need to be mindful of. Does it benefit you to move from wherever you're at to where you're at now, whether that be an upgrade in school system, whether that be an upgrade into more house, whether that, or when I say upgrade, are you buying more home? Are you getting more backyard? Are you getting more of the lifestyle that you want? Are you, is it a cost of living improvement? Is there a tax benefit for you buying this house? Or is your asset protected from creditors? Is there, there's all kinds of discounts and reasons why you should buy a home from a financial perspective. And I always believe it's better to own than rent, period. So understand why you're doing it. And then is it the right move to make? I don't know. I could never tell anybody when to buy or when to sell. I can tell them, how we can help service and support them in whatever their objective is, right? So if you're looking to sell, I'm going to find the one buyer on planet Earth willing to pay more than anybody else. If you're looking to buy, I'm going to find exactly what you want in a dream home, in a dream lifestyle, and get you the best deal possible. That's it. So it's never my job to tell anybody when to buy or when to sell. I can tell you that anytime you read about anything in the Wall Street Journal or any publication, then it's already baked into the price and it's too late to get involved. And that's just the reality of it. When you're reading about it, it's yesterday's news. That's the truth. So one of the things that we saw here recently, and it was right after, or actually take that back, it was right before, is that MSNBC put out an article that was talking about how inflation is actually a good thing. Inflation is not a good thing. But best believe that the powers that be that exist out there are absolutely going to start to do a number on everyone that starts to sell us on why inflation isn't bad, it's good. It's a necessary thing. This is what is needed. That's horseshit. So I hope nobody actually believes that, but please understand that there is definitely the media will try to control that narrative as much as humanly possible so that the markets don't react the way that they should react, which of course is negatively, right? When gasoline, if somebody goes out there and starts telling us how it's a good thing for gas to be at $10 a gallon, well, then the gig is up, right? So I hope nobody is ever going to buy that, but there will be people who do. So that is scary. One of the things that was talked about in the Meet with the Manager, Let Me Speak to a Manager YouTube channel, which if you have not subscribed and liked their content, I would encourage you to go check out. I'll actually include a link to it in this video. But one of the things they talked about is one of the things that was recently reported in, I don't know if it was the Wall Street Journal or the New York Times or whatever, but there was an article recently talking about millennials. And I don't think it comes as a surprise to anybody that millennials are the biggest buyer of real estate that exists out there. And that's just a fact. There's no argument in that. But what they talked about during the pandemic, and so when I was talking about Reventure's last piece, they talked about the canary in the coal mine. I want to talk about the canary in the coal mine that exists right now, and this was highlighted by Ian Matthews in the Let Me Speak to a Manager YouTube channel. But he talked about, as having been a underwriter for a long time, his concern always is the ability to repay that loan, right? So he wants to be prudent and ensure that whoever it is that's buying the home isn't going to bail on it so they get their money. And that obviously makes sense. One of the things that was pointed out is that when the pandemic started and everybody's locked in their home or in their, maybe not home, maybe they're in their apartment, maybe they're in their condo, maybe they're in whatever they live in, but you've got this younger demographic that is unmarried. Maybe they have roommates, whatever that looks like, but they're renting an apartment. They're stuck in these highly dense cities where, it's just, you're stuck, you're living in hell. It's an 800-foot unit that you're stuck in with you and your roommate, and there's no place to go. You're just trapped. And there's a lot of people out there that experience that. Well, as the pandemic and as the quarantines happened, and as everybody's locked in their house, not able to do anything other than watch Netflix and, order. At that point, I guess they were doing like delivery dues, whatever that is. But people are stuck. And so they're online, they're shopping, they're imagining, and that's why this channel has been so successful. They've gone out there and they started shopping new lifestyles. And as the pandemic started to not resolve itself, but as the quarantines ended and interest rates, because at this point, as you saw, the money supply went through the roof. There's all kinds of stimulus. There's all kinds of treasuries being bought back. Interest rates drop. It is now very favorable to go out there and it's not easy, but it's very, very attractive to get financing, right? So you got interest rates, 3%, under 3%, whatever the case may be. But you got people out there that have options. And now, because of the vaccine and because of Zoom and because of the new normal where people can work remotely, they got options. They can go out there, they can buy a home. And in spite of the fact that the market has appreciated basically everywhere, you got two people that are buying homes together. They're not married necessarily. But you got these millennials that are roommates or whatever the case is, and they're buying properties together. And in this article, they talk about the tremendous amount of home buyers that fit that profile. And there's a massive amount of them. So they're going out there, they're buying these properties, and they're getting everything that they wanted. They're getting more space. They're getting a better lifestyle. They're in this home together, and the market's continuing to appreciate, which I hope continues to happen. But what also are they at risk for? The correction. What do you think the likelihood of that friendship and that business arrangement and the ownership in that property looks like? This is the canary in the coal mine. What do you think that looks like if the market corrects and they're now underwater 100 grand on the property, or 30% or 50% or whatever percent? They're down on the property. Are they going to, what does the timeline look like for them to be able to weather that storm? And I suspect it's not very long. So if we're talking about potential risks to the market and, are we in a bubble? Well, I don't know. But I do believe that if in fact we do see a correction and interest rates skyrocket and those buyers are now exposed for the first time ever to being negative equity in their property, I got news for you. They're out. And then what happens? Well, then we do have a bubble. And then those properties, which are, and I don't have a stat on what that looks like right here for the basis of this conversation, but I can tell you it's big enough to impact the market materially. So do I see that happening anytime soon? No. Do I see a risk inherent to the market should that happen? Yeah, absolutely. So you got to be mindful of that, right? How does that impact someone who's looking to buy a home right now and relocate from somewhere else to, somebody stuck in California who's in lockdown, who wants to live in Florida and experience all the freedom that exists here? Does moving here make sense? Absolutely. Somebody stuck in the Northeast and they're tired of all the same things, and they move here and they upgrade to something bigger and better, and they're happy with that investment. Well, is that a good choice? Yes. Are they overpaying? Yet to be determined. I don't know, but the market is what someone, the value of real estate is always going to be what someone is willing to pay for it. And if you were to get the timing wrong and overpay for a shelter that you're going to live in for the next 10 years with your family and live in, is your quality of life better than where it was before? Well, the chances are very, I would imagine, I think it's a resounding yes. So let's say that market crashes. What happens? You got 10 years or longer to ride that storm out, and inevitably history is in your favor, because over time cash seeks its highest value, and the market is not going to, no market stays down forever, period. So stocks go up, markets go up, markets go down, markets go up, markets go down. That's just the nature of every market. So I don't know whether we're in a bubble or not, and neither does anybody else. But I do believe that it's important for me to make a distinction as to what I see overall as it relates to the overall market or markets versus the local market here in South Florida. The market that I see right now in South Florida in real time today, and based on everything that I can possibly read and track and know, is that we are radically undersupplied with tremendous demand. Values are appreciating. I think they will continue to appreciate. I think interest rates will continue to rise. I think that number is something like, and again, I'm going to go high end here, I think a year from now, if we're, 3+% right now, I think probably we're looking at somewhere between 4 and 4.5% next year. But if we're at 10% next year, we got big problems. I mean, period. I don't think that's going to happen, but I don't know anything. I don't know if gasoline's going to be at $10 in a year or if it's going to be lower. It's possible. Anything's possible. But what I do know is there's a tremendous benefit to being in a home and a lifestyle and locked into an interest rate right now that is more attractive than it will be a year from now, 2 years from now, 5 years from now. That's just the way it is. So, if you're out there, there's a saying that I've used in other videos that's very famous. It's not mine. It's Warren Buffett's, which is, of course, be fearful when others are greedy, and greedy when others are fearful. That is very, very true. Also understand why you're buying what you're buying. So if you're buying a home and a lifestyle for very solid reasons that are prudent and responsible and improvements to your overall life, then that's a good decision. If you're buying something to flip it, or if you're an investor out there, I would be dialed into what is the cash flow you're receiving on that investment. That's what I would be dialed into right now. I would only be buying best of breed companies that exist right now that you would be happy owning for the rest of your life. So, and the best example of this is Warren Buffett. When he went out there and he bought Coca-Cola in the 70s, he bought a significant amount of Coca-Cola. And what happened to that? Well, it went from whatever it was at then in the 1950s. I think, I don't know what price he bought it at, but I can tell you 70 years later, it looks like the most genius thing that he ever did because he held it. And what is Coke now? Is it a one-trick pony, or is it a diversified business that owns, 700 other products or 700 different beverages? Well, it's the latter. So I'm never going to be the one to tell anybody or even try to predict what the future of anything looks like. I have no clue, and neither does anybody else. But in terms of responsibility, I think it's important for me to continue to communicate the message of what we're looking at in real time. Right now, we have I don't even want to call it a healthy market, because in my opinion, I think a more healthy, balanced market is something that's, somewhere around 5 months of inventory 4.5, 5 months of inventory. Right now, in most places here in South Florida, we're less than 1 month of inventory, which means that that's how. So when I talk about the supply of homes, when I talk about a month of inventory, that's how long it would take for all of the homes that are on the market to sell, period. And if it's over 6 months, then it's a buyer's market. If it's under 6 months, it's a seller's market. Right now, we're at a month of inventory in most places, plus or minus, depending on where you're at. But we have tremendous, tremendous demand and very little supply. It is a huge seller's market. Will it be that way forever? No, absolutely not. So if there's an old saying that you don't get hurt taking a profit, you don't get hurt taking a profit. If right now that is the right thing for you to do, then make hay while the sun is shining, my friends. Now's a great time to sell. If you're looking to buy right now, interest rates right now, we know for certain, look at the chart. Look at the chart of the money supply, and then look at what they've told us. The Fed has said they are done buying like this. Well, that's going to negatively impact interest rates. So they're going to rise. I just don't when. I don't know when, and I don't know how fast, and I don't know what that looks like on the high end, other than from a historical perspective. When Carter was president, interest rates were somewhere near 17 or 18%. However, he wasn't advocating for more taxes. He wasn't advocating for anything like what we're seeing right now. What we're seeing now is more spending and more taxes. So you could say what you want about Reagan, you could say what Ronald Reagan, you could say what you want about Donald Trump. However, what they did was they created a tax code that was favorable for investors in real estate. So that's not where we're at today, my friends, at all. So that's going to change. And I'm sure there are prudent and responsible things for investors to be doing to smartly capitalize on their liquidity or wherever they're at, right? So right now, if you're holding something and you have the ability to refinance, you absolutely should be doing that. And most people should be considering that, depending on where they're at in terms of financing. But just know interest rates they will absolutely increase, and you can take advantage of the lowest rates in history right now. I can take advantage of the lowest rates in history that exist right now, period. I think a jumbo conventional to up to 1.5 million is close to 3%. I mean, they're giving money away, and you can lock in these interest rates now before all of the inflationary pressures that exist really hit and interest rates rise. That's a good position to be in right now. Real estate is a hedge against inflation, but just like anything, you make your money when you buy. You realize those gains when you sell, but the smart investor buys at the right price. Now, on anything, right? But a house, a home, well, yes, it may be an investment. Is that why you're buying it? I don't know. Are you buying it to live in it? Are you buying it for the benefits that exist and the lifestyle that exists from living in it? Are you buying this? Why are you buying it? And what is your timeline? That's important. It's very important. So you have to be prudent. You have to be responsible. And this video specifically is to address some of the comments that exist out there talking about me being in denial. Denial is not just a river in Egypt, my friend. And I'm not in denial. I can read and see this chart just as good as anybody else. And I can see and know that we are in a highly unusual period in history. And there are lots of things that are going to change. However, the market dynamics that exist right now haven't. So I hope that makes sense. I do hope that makes sense. There's a lot of fear out there right now, right? And I get it. There's a lot of the market, any market hates uncertainty. So what can you do to give yourself the most certainty that exists when making a decision? Well, you've got to be informed. You've got to be prudent. You've got to be patient. And then you've got to have enough gumption to pull the trigger and know that you made the right decision. So I don't believe that we are on the precipice of a bubble bursting at all. But I don't know, and neither does anybody else. Time will tell. In the interim, I will continue to bring you all of the information, all of the most actionable information. I will come to you with the best information so that you can make the best decisions for yourself and for your family. But when baseball cards are going for record highs, when NFTs are going for record high, I don't even, my knowledge of NFTs is rudimentary at best, but when people are spending money on things and the value of those things have gone so astronomically haywire that they don't really make any sense to me, it's time to look around and evaluate what you're doing and why, and what your timeline is and why. So I hope that all makes sense. If it did, then please give it a thumbs up, like, subscribe, and if there's ever anything I can do to help you, then please reach out. Chris Igoe, 561-516-2442. Go out there and get some.